Good afternoon, everybody. Today I'm chatting with John Miniotis from AbraSilver. In this interview, we discuss AbraSilver's pre-feasibility study, which just came out this week. We get into the assumptions and variables that the company chose to use in this study, and we also discuss why the company has such a low projected payback period. We also touch on the political climate in Argentina, which has seen some pretty big changes thanks to newly elected Javier Milei. And John also gives us his overall thoughts on why he's bullish on silver. All right, everybody, enjoy the interview. John, thanks so much for joining us today.
Oh, it's my pleasure. Thank you for having me.
So AbraSilver just put out a pre-feasibility study. Can you tell us what this means for the company?
Yeah. So great timing. Thanks for having me right now. We just announced our pre-feasibility study earlier this week on our Marquee Diablillos project. So this is now an advanced stage, open pitable silver and gold project. It's located in the Salta province of Argentina, very mining friendly. And as part of this pre-feas, we declared our maiden proven and probable reserves as well. And so now we're sitting on reserves here, over 120 million ounces of silver and 1.1 million ounces of gold. So this is 100% precious metals, all located close to surface, open pitable. The reserve base is now approximately 210 million ounces of silver equivalent. And again, it's only silver and gold. And in terms of the results, I think the pre-feasibility study results really speak for themselves. And so you can see very, very compelling economics. When you look at the headline figures, the base case estimate was about $500 million US as a net present value, which is just under $700 million Canadian. Very robust internal rate of return, and large scale production here. Initially, your production is about 18 million ounces a year of silver equivalent over the first 5 years. And importantly, the cash cost profile here is in the best quartile. So again, for the first 5 years of production, cash costs will be less than $10 an ounce silver. So high margin, large scale, with lots and lots of exploration upside ahead of us here. So we truly feel this pre-feasibility study really helps, wrap around the economics currently, but there's still a lot more upside here to be discovered.
So some of the chatter online that we saw after you guys put out the pre-feas is some people didn't love the variables you guys chose for gold and silver. I think that they're fine. 1850 gold and 2350 silver. What's your response to people who are saying that it's too high?
Sure. I mean, yeah, that's why we have sensitivity analysis done. So when you look at, it's literally in table 1 of the press release. So for anyone who scrolled to the second page of the press release, we have our base case assumptions, which are very much in line with what the peers used. But then we have spot prices, we have base case plus and minus 15%. So yeah, I think all the information's there. In the bearish price scenario, base case minus 15%. This is clearly very, very conservative as a long-term commodity prices. But that's about $20 an ounce silver and just over $1,500 a gold. I think it was maybe $1,570 or something like that. And still, we had a robust internal rate of return approaching almost 20% under that, clearly bearish price scenario. And the payback period, again, is just about 3 years. So this is certainly, given the low-cost nature of this deposit, this is a project that works under really any foreseeable commodity price environment. In fact, some investors were saying, well, we believe $40 silver long term. And so there's guys saying, look, you should have been more optimistic. There's always other investors saying, should be more conservative. But yeah, that's why we provide a whole spectrum, literally in table 1 of the press release there.
It's hard to imagine the price going much lower than either of those figures. I think there'd have to be some pretty significant deflation built into the economy in order to see that happen.
Exactly. And typically you base it sort of loosely on a trailing 3-year average, and we calculated that as well. And both the gold and silver price estimate we used as a base case was very much in line with that. So yeah, I think it's industry standard.
So the payback period's pretty quick here, depending on what you want to use. We're still sitting at, somewhere in that ballpark, or 2.1 to 3.2 years payback, depending on which of the scenarios you want to use. What makes it so quick to pay off the costs when we're talking about this project? What makes it so cheap?
Yeah. So when you look at the production profile, and again, I think that's figure 1 in the press release, you can see that it's really, really front-end loaded here. So between years 1 and all the way through year 5, we're processing very high grades. In fact, the average grade profile for those 5 years is it's about 210 grams per ton of silver equivalent. And so if you use a 70 to 1 silver to gold ratio, that's 3 grams per ton of gold. And so extremely high for an open pitable oxide project to be processing on average 3 grams over 5 years. That goes to show you that we have that new Jack discovery that we made last year. That's being processed between years 1 through 5, and then at the main deposit, the Oculto pit, we have the high grade Tesoro zone coming on in those early years. And so I think your average after-tax free cash flow during that period is about $150 million per year from year 1 to 5. And so, yeah, very, very good economics here. And you get the high grades up front, which is important, pay back the capital costs. And then, of course, the rest is gravy on top of that.
There's obviously going to have to be some financing done to get this project to the finish line in terms of production. What's the strategy there? What's the plan there if a shareholder decides that they want to hop in as a retail investor, buy the shares open market? How can they get a sense of comfort or confidence that they're going to be okay, given the fact that there's going to be some project financing that needed to be done here?
Yeah. So we're an explorer right now. We're an advanced stage exploration company. And so this is the pre-feasibility study level. Our goal here is to continue to drill, which will recommence drilling later this year as part of this phase 4 exploration campaign. And then by the end of 2025, we should be able to complete a bankable feasibility study. And so that will be the final study, essentially. And then we'll have the permits in place as well, the key construction permits in place by the end of 2025. And then in 2026, you can essentially start looking for project financing and sort of your construction alternatives. Given the size of this project, it's unlikely a junior like ourselves would build this as a 9,000 ton per day plant all right out of the gate. So we would look, if we're going to be the ones building it here, you can look to incrementally build this out. So maybe you start off with a low-cost heap leach, which could cost, $150 million or even less than that. You start generating some free cash flow from that, and then you start building out sort of the larger production profile that we were seeing here. So you do that in incremental steps because, obviously for a junior to finance a $400 million US capital project, there'd be huge amounts of dilution. So we're not looking to do that right now. We're looking to continue to drill, continue to de-risk this project, advance it towards a construction decision, and then evaluate all our alternatives, whether that's bringing in a joint venture partner like we did at our La Coipita project. We brought in Teck resources there. Whether it's selling the project, maybe keeping something for a spin-off, or project financing this ourselves, in which case you'd look to build this out sort of in incremental phases to keep the overall capital costs manageable for a company of our size. So all those options are on the table, and we'll decide that as we get closer to the construction decision, which will be later in 2025.
So it's fair to say that the next steps here after releasing this pre-feasibility study is that you guys are going to be doing more drilling.
Yes. Yeah. So more study work as well. So right now we'll be recommencing some studies looking at processing lower grade materials. So there's a significant amount of mineralization here that was just below the cutoff grade that we used. So we used 45 grams per ton of silver as our cutoff grade. And there's, between 30 to 45 million tons of mineralization here that has just below that cutoff grade. For this study, we just assumed that was waste. And so we put that onto the waste pad, and clearly that's not the optimal solution. And so we're going to go back, revisit that, seeing if there's a way we can process this lower grade mineralization, potentially as a heap leach or other alternatives. And that could significantly further increase the net asset value, the internal rate of return here. So that can further improve the economics. And that study would have a minimal cost, certainly less than $1 million to complete that study. So that's something that we'll be undertaking shortly here. Expect to have that announced within the next 6 months or so, I would say. And then at the same time, looking to commence our phase 4 exploration campaign, where we have a number of priority targets, drill those out, and then incorporate those targets into next year's bankable feasibility study.
I think this is an important question for a lot of our audience that invest in junior mining and are looking for companies that are trying to move their projects along. How much drilling has in total been done on the project, whether it's through you guys or previous owners of the property? What's the total number of meters or money spent on drilling the project?
Yeah, here it's been over 130,000 meters of drilling, so a large amount of drilling. That's why we've been able to declare a proven and probable reserve here with over 40 million tons. And so, in total dollar amounts, it's been well over 60, probably closer to 70 million US has been spent on the drilling to define all the resources, the reserves. But that being said, the vast majority of that is focused on the main Oculto deposit. And so essentially, I think over 110,000 meters was drilled on that main deposit. Last year, we discovered the satellite deposit called Jack. We drilled 20,000 meters on that. In that, that's why we have that high grade production in years 1 through 5. So that's added immediate value. And so now we're looking to drill off certain other satellite deposits. We have Phantasma, Alpaca, etc. And so with minimal drilling going forward, we could have now a number of high-grade deposits all close to surface. And so you could still add a lot of value going forward with relatively low-cost drilling, because this is shallow, located close to surface.
One of the metrics I noticed in your investor presentation that I thought was pretty cool, that I don't really see very often, is that you guys actually broke down how much it cost per ounce of silver equivalent to double the size of the measured and indicated. Now, obviously, we've moved past measured and indicated at this point, but I thought that for investors, just sort of looking at the use of capital by management and the efficiency of it, that's a pretty good metric, and something that you guys, it sounds to me like something you guys should be proud of, and really helps investors sort of capture that idea of just on a per ounce basis, how much is actually being spent just to double that size of resource. You guys also have 4 analysts on the stock. I see that, which we'll keep our eyes out for any notes. I'm sure that they're out this morning. Let's talk about Argentina. Argentina is obviously going through a pretty big political transformation. We'll put it that way. With Milei, who's become a bit of a hero on social media.
Absolutely.
So, what impact do you expect Milei to have on the mining sector?
Yeah, so his agenda is very, very clear. I mean, he's looking to eliminate essentially the role of government there as much as possible, and then incentivize foreign direct investment and large-scale investment in the private sector. And so, we're extremely pleased. I mean, he seems to have a large percentage of the populace in Argentina supporting him. So he has a very, very strong mandate, I'd say, from the entire country, which he has overwhelming support of. But yeah, in terms of his reforms, he's already presented a large number of reforms to Congress. I think he's working on gathering political support to be able to pass those into legislation. But yeah, all of it's very, very positive. So looking to reduce corporate tax rates in Argentina from 35% to 25%. When you run that through our model, I mean, of course, we assume the current tax rates in the pre-feasibility study of 35%. But if you were to reduce those by 10 percentage points, the NPV of this project increases by over $100 million. And so that change alone results in $100 million additional value here for our shareholders. He's looking to eliminate mining export duties, I think starting from year 3 for all new projects. Again, that's well over $100 million additional benefit in our base case price assumptions here. And then he's looking to essentially stabilize the economy, removing FX restrictions, etc. So, I think when you look at our pre-feasibility study, there was over $1 billion that went to the government in forms of taxes, royalties, export duties, all of that. And so that's reflected, despite that $1 billion, we already have a very strong, robust after-tax NPV and IRR. But certainly, if you can reduce some of that tax burden, eliminate export duties, could clearly have a very, very significant benefit to ourselves and every other major, projected investment project in the country. And I think that's Milei's agenda. Is he's looking to bring in foreign direct investment, invest in jobs, invest in the private sector, and eliminate hurdles that currently exist in the economy. So, it's still early. He's only been in office since December, but he's already made significant progress. And I think he has very, very strong support from the population here. And hopefully he's able to implement a lot of those changes.
How closely are you following the silver narrative? I know that there is a very rabid silver bug community that had a big push a couple of years ago with the silver squeeze hashtag on Twitter, and started to feel like silver was going to take off, and then it didn't. And then there's just always been this large community of investors that believe in the silver thesis. Do you pay much attention to the narrative surrounding the supply and demand factors of silver, or are you mostly just figuring, okay, this is the hand I've been dealt, I'm focused on just moving the project forward?
Sure. No. Of course, I follow clearly mostly the supply side. So I monitor our peers, other comparable projects very closely, see as those are advancing, making progress, and of course, Diablillos now, with the scale of production that we were projecting, would actually be one of the top 10 primary silver mines in the world with our production scale, especially in those first 5 years. I mentioned 18 million ounces a year of silver equivalent production, and the vast majority of that is silver with some gold on top of that. Gets you that 18 million ounce figure. And so, this is certainly a world-class project. And, I'd say there's very, very few high quality, large scale primary silver projects, approaching the bankable feasibility study, approaching sort of a construction decision. And so overall, from what I see, I mean, the supply has been flat. In fact, it's actually been declining slightly over the last few years here. That trend's expected to continue. But demand on the other side has seen a significant increase from solar panels, especially from investment demand as well. As you mentioned, there's been a big movement over the last several years, people stacking silver bars, silver coins, etc. That obviously has very positive implications. And then on the demand side, electronics, of course, and other items that require silver continue to grow in demand. So I'd say the supply demand, situation for silver is actually very, very positive. Unfortunately, that's not being reflected in the current spot prices. It's extremely frustrating, and I think that's why you see a big movement of like-minded people, trying to evaluate the situation. I mean, I don't know exactly what's causing the price to be suppressed here, but I think it's no question, especially as you see gold rising to all-time highs here. It's clear silver is kind of being anchored down to some extent, but over time, I think that's going to repair itself here. And you could see much higher silver prices in the years ahead. And so having a high quality project like this, I think really positions us very well in that environment.
So last question for you, John. If I'm an investor or a potential investor and I'm watching the company and I'm trying to figure out what does 2024 look like in terms of timelines, milestones, that sort of stuff. What am I watching out for the remainder of the year?
So that other study that I mentioned here, looking at the sort of the heap leach potential, we would have that again within by the end of the summer. I'd say is our expectation to have that additional study completed. So that's almost like a pre-feasibility study version 2.0, if you will, or an enhanced scenario that we're looking to study. Between now and then, of course, we're going to recommence our phase 4 drill campaign, drilling a lot of these other targets between Fantasma, Alpaca, Jack North, and then even infill drilling the main Oculto deposit, etc. Looking to enhance the resource, continue to grow that, and in time for next year's bankable feasibility study. So I think, a lot of catalysts between now and then. But then, what's important is the finish line here for this project is to have a fully permitted study that's construction ready. And we're not too far away from that in mining sort of terms, with that being achievable before the end of 2025 here. So it's an exciting time for the company for sure. We're going to continue to advance this, grow this, de-risk this, and we're hoping all the stars align with hopefully some higher silver prices and better investor sentiment in the junior space here. We can certainly see ourselves re-rating to trade much closer to what the true value of this project reflects.
Okay, well, John, thanks very much for hopping on here today. I think you guys have a very interesting project. We are cheering for anybody who's able to get a project to production, or at least keep moving it forward in that direction. So we wish you continued success, and hopefully as we see more results come out, you'll hop back on here and update our audience with the latest results.
That'd be my pleasure. Thanks again for having me.
All right, everyone. Thank you for watching. If you enjoyed this interview, please smash that like button, subscribe, and ring that notification bell. Also, let me know what you think in the comment section. Thanks, everyone.